Okay, let's get right into the stock market technical analysis. We're going to look at the broad markets. We'll look at some of these stocks that just reported earnings, such as Tesla and Netflix. Look at commodities, and then we'll go ahead and wrap up. So triple Qs, guys. All right, so I have to go down to the hourly time frame just to show kind of the most recent price action. We had this little uptrend line right here on the hourly. We had negative divergence that was building, and we have a breakdown and a sell signal. So that's a breakdown. It looks like we're kind of falling near support. So we might get a little bounce here because, the thing is we still have major earnings. We're in the middle of earnings season, so expect volatility. Okay, you're not going to very likely just crash straight down or spike straight up. You're probably going to have a lot of back and forth. So keep that in mind. Maybe a little pop here. But ultimately, this trend line was broken. So it's on a sell signal. So it should be sell the rip. And we should continue to head lower. If I look at the daily chart here, where do we go? Well, we have an uptrend line. It's marked in blue. This is your daily chart. So this is really the entire rally for the in triple Qs, the tech sector for all of 2023, and the support line is down there. So that's where I think we're going. All right, I've talked about that. I still think we're heading down to that lower support line, and then from there, you're likely going to get a bounce. I think it's a very high probability you get a bounce. Do we bounce to new highs? I don't exactly, I don't know. I don't think so. We have been building negative divergence on the daily chart for a while in triple Qs. And we have a new negative divergence now, so there it is. So ultimately, I think we're probably going to break that trend line, but we have to see it. All right, we need to see the break in order to initiate a longer-term swing trade to the downside. Okay, so in general, that's really all I have for triple Qs. Let's go ahead and look at some of these initial FANG stocks. They're all pretty much down today. Again, they all like to trade together. Amazon down. Nothing real technically different from the last really the last couple, about a month. So we'll move on from that one. Google, again, just continuing to top out right around at this area. If I roll out, you can see that's kind of former resistance. Good resistance was right there at about 122.43. And we popped it a couple times. We've been kind of just popping above that, but it's been a divergent high. We've been building negative divergence. And that tells me that the little spiky price action above this resistance level is really just stop clearing moves, and it's likely going to reverse trend. So still thinking there's more downside there. The chart tells me that. Microsoft broke out from a resistance line on the 18th. And if I roll out, you can see here on Microsoft, that's your former high right there on the daily. So as I zoom in, and we had a single reaction there, and then this is a breakout right there. All right, and as of right now, it's just a breakout and a back test. Okay, that's all that we have. So technically, there is no change in price. However, it's divergence. The breakout occurred with negative divergence, which sets it up for a higher probability of failing. By a fail, I mean back below resistance. All right, trading back below resistance. So we don't have that now, and that's what I'd be on the lookout for. As of right now, it's a breakout and a back test. You might see another bounce here. Ultimately, what I'm really looking for is the failure, the break back down below that former resistance, which is about at a 348.42. So if you get that, that would mean this is a false breakout. I don't know if that happens today. You're probably going to bounce here, but we'll see. Meta, I kind of adjusted my trend line. Now I had my bearish rising wedge, something like this, but it kept trading so close to that wedge, and we have enough reactions now. I'm just going to move it down, give it the benefit of the doubt basically, and move it down to about right there. So I'm gonna, because we have another reaction right there, so I want to see a break of that in order to trigger the next sell signal on Meta. I think it's going to happen. You've had big negative divergence building on this one for a while. So each new high has not taken out the divergence, it's just extended it. And that just tells me that this big bearish rising wedge is setting up for a large trend reversal and really the next swing trade to the downside. Who knows how, it's not going to do that. It's going to, work its way lower. But ultimately looking for a lot lower prices here in Meta. in the near future, we got to get through earnings season. Meta's going to report. We also have this gap to fill here. Meta's reporting here on the 26th, so next week. Next week's a big week for tech. All right, and then there's a big gap here, so that would be my target really ultimately in the near term. But we don't have that breakdown and sell signal yet, or at least not against this wedge. All right, we had it on the previous wedge, but it was so close, and they weren't really giving us an impulsive sell down. It just makes sense to kind of modify this wedge. And Apple, same with Apple. Apple's basically been trading in this bearish rising wedge right here. It did break down here, but we're still, back testing basically. I could probably just adjust this wedge just slightly like that. So we need to see another breakdown, a big impulsive red candle, reversal candle, something like that would signal the sell signal. The negative divergence tells me it's coming. All right, it's right here. It's been building for a while, and it tells me that we're going to get that breakdown. We also have a bearish rising wedge pattern. So look, stocks, I know they feel like they can just go up forever, but ultimately this is really just setting up for a major trend reversal. So not a good time. It's not objective, and just the risk reward, it's not a good time to be putting new money to work in this. And ultimately, looks like looks like it's about to reverse trend, but we don't have the sell signal yet, so I need to see that breakdown in order to trigger an entry. Tesla. All right, so Tesla, I did point this out, especially to the private member group. I talked about this being a key downtrend line. This is the bear market in Tesla. As much as this has rallied, all right, this has rallied from the lows up to that trend line, 188%. The trend is still down, lower highs and lower lows. Tesla moves a lot. It's a high beta stock. So lower highs, and here's your lows, making lower lows. So ultimately this high is a lower high. So, and earnings came out, they routed it right into that major resistance, right into earnings. And then, and then it was set up to sell down, and it had negative divergence into that. So it was a divergent high into major resistance right ahead of earnings, and there's the results. All right, gapping down and selling off 7%. Now I think it's probably going to bounce here. All right, maybe you get a little rally, fill some of this gap here, but ultimately this looks like a sell the rip stock. All right, so it looks like rallies should be shorted or sold into, and I would expect we're heading down to this trend line right here. This is your uptrend line, and I think that's where we're going. So work our way down, probably get a reaction there, but work our way down to that trend line. So wherever that wherever that falls, there's the trend line. And then ultimately, I think we're going to break the trend line and head lower, but again, we'll need to see those other stocks do the same. Okay, next up, Netflix. That was another one that reported. It's not so much that they missed. It's just what the market was technically set up to sell down. Okay, doesn't guarantee that it's going to, but on this one, look, negative divergence. There it is. I know people think like these divergences don't matter, but they always seem to show up right before a move. All right, so there's your negative divergence. Divergent, and you popped up right ahead of earnings, made a divergent high into the resistance. This is the upward channel here, and you popped up, and you're in trading up into that channel's resistance right ahead of earnings with negative divergence. Look, they popped it just briefly above. That's a stop rate, okay? And then earnings come out, boom, smash down 9%. So, all right, this one at this point, it looks to be going to trade down to the bottom of the channel, okay? And then at that point, that's where the dip buyers will be at least for an initial reaction. And so I wouldn't, if you're shorting, that's probably where it makes sense to cover. You probably get a bounce. And then ultimately, I do think you're going to break, but we need to see the break. All right. So as of right now, just a short down to the support line is what makes the most sense for a kind of a short-term trade there. Okay. So that's Netflix. Here's gold. Gold miners pull back today. I think you probably can pull back a little bit more. I think there's a gap to fill right here as well. I don't know if we'll fill the gap, but this trend line right down here, I like a continued pullback on this one to about right there, which is about 30.83 or so, if that happens today or tomorrow. And then again, I'm looking to buy the dips on this, so pull back to there. That's where I'd want to be a buyer, right down there. And then when I look at like Newmont, it's actually trading into, looks like it's trading down into some support right in here. All right. It's a little choppy, but support looks to be right around 42.88. But again, if GDX is going to continue to pull back, I don't know. This one could continue to sell off. It missed on earnings, but in general, it's pulling back to support. So, earnings oftentimes, sometimes companies will come out with great earnings, and that's the opportunity to sell. All right, that'll usually mark the high water mark, and then sometimes they'll come out with an earnings miss, and that will mark the low water mark. So don't really read too much into the actual beat of expectations or miss of expectations. What you really want to look for is, how does the market treat it? All right, are they buying? Are they buying the dip? Are they selling the rip? Stuff like that. Commodities, wheat being my favorite only because it really sold off a decent amount, and the chart was just a nice clean bearish rising wedge pattern when it had nice clean bullish divergence. Sorry, bullish rising wedge pattern and bullish divergence. So very bullish setup. So that's why it was, my favorite, just a very clean chart. And then ultimately we got the breakout. All right, there's a nice breakout and a back test. So nothing technically broken here. It's very, it's been a very clean trading chart. I've talked about this, especially to the private member group along the way, kind of each step of the way. And, I get a lot of people, especially on wheat, a lot of people, oh, wheat hasn't worked out. It's not, and that was kind of down in here, saying, oh, well, this one hasn't worked out. Yeah. Again, I'm trying to give you guys the trade before it shows up. All right. And if I, if wheat goes like that and I say, hey, wheat just rallied a ton, what benefit does that do anybody? Every single trade that I point out to you guys, I'm typically going to point those trades out before they worked out. And there's no guarantees they will work out. But ultimately, all the trades that I point out will, it's just the style that I trade. I'm going to point them out before the herd recognizes that trade is there. All right. That's how you make money. You got to be first. You got to be ahead of, the herd. And then ultimately you have to be right, of course. So, if you just want to jump on a trend trade and catch the last little bit, you'll be right away. Because that's kind of how it works. If something's going up and you just plow money in, you'll be right away because the trend is up. But when do you get out? And you might not know when to get out. And then ultimately, usually if you're the last to a trade, they're going to trap you. All right, it's going to gap down or something, and then so you're right away, and then all of a sudden you're wrong and you can't get your money back. So I'd rather be right, wrong in the beginning, get in early, a little bit early. And then ultimately, be right at the end of the day. So now this one, rallying, you got resistance. Your former highs right there. Look, there's a resistance. There's some support. There's resistance. So, and then you got the 200 days. So, there's a confluence of resistance overhead. It's about 730 right in there. So the next major buy signal would be a breakout above that. All right, you break out above that, we should head right up to this reaction point, which is about 805. Get a pullback there. Another resistance level about 950. All right, get a pullback there. And then you've got the all-time highs. Or I don't know if it's the all-time highs, but the near-term highs right up in this area. All right, so that's how I think it's going. All right, I think we're going to ultimately, I think, whether we get a pullback right here or not, we're going to go like that, maybe bounce. Like that, maybe bounce, all right? Ultimately hit that and break out, all right? And put in new highs. And let's look at that DJP chart. This is your broad-based commodity index. It's got a lot of oil in there. But at the end of the day, we are continuing higher. We're above the 200-day moving average right now. So not by much. So it might sell down here, but above it now. And if this continues to rise, inflationary pressures will continue to rise, and the market will say, oh, the Fed's not done hiking. And that's all in the future, and it might not happen, but this chart tells me that it's very likely to happen. So the narrative will change. Do you want to be late to that narrative, or do you want to be early, I guess, is the nature of what I'm trying to explain. Home builders. All right, so here's DHI. This is just the reason why I gravitate towards this one. It just has a cleaner chart. but it's a home builder. Bearish rising wedge. All right, they broke it to the upside there. All right, again, when you see those bearish rising wedges and you break to the upside, usually it's a stop clearing move. Big negative divergence here on this one. And again, that is a stop clearing move for sure, because today's price action, now it was earnings based, down 3%, but that as of right now is a bearish engulfing candle. Okay, so what you'd look for is follow through, and I think we're going to get it, but ultimately it's probably going to go like this. Tomorrow, down again, down to this trend line. Okay, down here, you probably get a bounce, and that bounce could go all the way back up to the top of this wedge trend line, but ultimately the pattern will be in place now where you'll have a reversal and confirmation. All right, reversal candlestick, which is the bearish rising wedge, which is the bearish engulfing candle, and you'll have confirmation, which is more follow through. So that rip, if you get a bounce at that support line, should be sold into. All right, and that would be an objective. If they rally it back up to the top of the wedge, that's an objective area to short, and then ultimately you should break the wedge and start to head lower. So that's DHI. And then, and then the other thing is just big negative divergence. The entire wedge, for the most part, has been a divergent wedge. So again, that's why, when you have divergence, it doesn't tell you, oh, short because I have divergence, because the divergence can grow. All right, it can build and build and build, and if you just short based on divergence, then you're just underwater. So that doesn't give me an indication. But what it does tell me is that, be on the lookout for a break. All right, now this one has run its course, I believe, and you're likely going to see pretty impulsive selling when the music stops. The selling should be strong. And then we'll look at XHB, which is the home builder sector. Now this one, look at that. So here, again, the wedge that I have is right there. Breakout, backtest. All right, everything looks golden. It looks like, hey, off to the races. But the one tell to me is you've got this bearish rising wedge and you have negative divergence. All right, the divergence tells me that, hey, this is very likely, and the divergence on this one really showed up about there, very likely going to be a false breakout. All right, and no guarantees, but even if I zoom in on the PPO, you can see it looks like we're about to make that bearish PPO crossover. All right, you get that, that's going to be confirmation. And yeah, this to me looks like, a bearish engulfing. All right, and so what I'd look for is continued sell-off, probably down to this trend line here. Maybe you get a little bounce there again, because again, the dip buyers, they don't know when to give up. It's kind of been built into a lot of it's almost a generational pattern, because the Fed has been involved with the market for so long now. The Fed's not there now. They're not cutting rates and not really supporting the market. But they've been there for the last 10, 12, 15, I don't know, back since 2007, 8, so stuff like that. So, and really even before then. So that's it. Bearish engulfing, I think we sell down here. You probably get a little bounce, but ultimately look for it to break back into the wedge. You probably bounce here, and then a breakdown below the wedge. That's your kind of your big sell signal. All right, that tells you, boom, this is a big reversal. Now that's down there a ways, because from where we're at, just a break, that's 10% down, but that would signal the big breakdown. And from there, you take the widest part of the wedge, mark out wherever it breaks down. And again, I've got it kind of marked out. It's putting us down near the lows again. So all this big move up could get completely reversed in a new trend trade to the downside. Again, I want to be participating in that. And it's, and if likely, you're probably going to make new lows. And just scanning across, here's a Pulte group. They're all putting in bearish engulfing candles. Here's this one. You can kind of extend that one out. Just clean uptrend line there. Clean negative divergence. This just looks like a great sector for probably one of my favorite sectors to short right now. Now, I'm not shorting. I do not have short positions in this, but it's just one of the cleanest sectors for bearish setups. So again, we need to see sell signals. We need to see break of trends. Guys, that's about all I got. If you're interested in learning this as a skill set, check out my stock market technical analysis course. Link in the description below. Feel free to join up on the private member group. Again, I'm putting additional trade ideas out there. If I don't put out a video every day. I'm still usually in the private member group posting charts and giving trade ideas, giving commentary on the market, stuff like that. So link in the description to join up. It's pretty affordable. Again, I can't promise that I'm going to get everything right, so manage your risk accordingly. But I can promise that I'll continue to put out trade ideas, and especially in the private member group. Okay, guys, take care. Catch you on the next one.